Let's bring in Loup Ventures founder and Fast Money friend Gene Munster for more on Uber. Gene, what do you make of the pricing, and where do you stand on this particular issue?
Melissa, I was surprised at the pricing. I think that if you look at a comparable kind of fast forward to 2020, which is a long ways out for these companies, but taking those estimates at face value for a minute, the pricing at this $83 billion is going to be about 40% higher on a revenue multiple versus where Lyft is trading on their 2020 numbers, 40. Typically, when you see two companies that are similar businesses, in fact, 85% of their revenue is overlapping, typically you'll see a closer spread. Now, I understand they do have longer-term different business models, Lyft being U.S., moving people around, Uber being global, around moving people, food, and some logistics. So I understand that there's some optionality value that might account for some of that 40% difference, but this seems to me just simply too wide of a gap. I would recommend investors not play the IPO, wait for this to kind of settle down to more like a $60 billion valuation, and then think about, do you have the appetite to weather what's going to be a difficult 2019 for both Lyft and Uber as they invest in the future.
Right. So you think the pricing is too high at this point, Gene, but in terms of just the fundamental business, let's say down the line it trades lower and there might be an opportunity. Do you like this fundamental business, and do you see a path to profitability that so many people are so hung up on?
I do longer term like the fundamental business. I think 3-5 years from now, these companies, Lyft and Uber, both will be around. And the specific reason which gets me optimistic about this is I'm a believer in the undeniable truth around autonomy and the impact on that can have on their business model. And I understand that there's a huge investment phase in between now and then. But Melissa, the simple answer is I am able to see through in how autonomy longer term can have a positive impact.
How do you think autonomy? Let's extrapolate then to that point in time where autonomy saves their business and that's their path to profitability. Right now, they don't own cars. Right now, they don't pay salaries to any workers. They're pretty asset light. At the time where autonomy is prevalent, they are able to use that model. Do they own the fleets then? Do they then become asset heavy? Are they dependent on other people who own those fleets of autonomous cars and sort of lend them to Uber? I mean, how do they actually make money from that situation versus what they have now?
When we think about all the variables, they're staggering. These unknowns, exactly, you outlined some of them. If you partner, you take an example of Lyft potentially partnering with Waymo. What's the revenue split going to be between those two? There's just so many assumptions that need to be built to get you comfortable in the long term. It's quite an exercise. But to answer your question is we think that the best path forward for both Lyft and Uber is to partner with hardware players and essentially use their brand around transportation as kind of a high level and take a high profitable cut out of that. If you believe that that is, in fact, the future, then you'd probably overweight and want to own Lyft just because their approach tends to be more partnership when it comes to autonomy. Recall all of the efforts that Uber has had around autonomy. Some of those have put the brakes on. What happened in Phoenix and separately around some IP that potentially was taken from Google. All of that, I think, speaks to a very different approach to autonomy. But that is where you need to get to, is a point where they're asset light and they just take a cut.
Gene, hold on. We've got some more breaking news on Uber. Leslie Picker's in the newsroom with the official press release just out. Leslie.
Hey, Melissa, that's right. The company issuing a press release confirming that $45 per share price for its initial public offering. They also said that they plan to sell $180 million, so confirming that the offering size will be $8.1 billion as it gets allocated to investors. Now, this $45 per share also implies a fully diluted valuation of $82.4 billion, significantly higher than where their last private fundraise was at $76 billion. But as we mentioned earlier, the $45 per share is about $1 above the low end of the range they had been marketing to investors. Melissa.
All right, Leslie, thank you. Leslie Picker in the newsroom. Let's go back to Gene Munster of Loup Ventures. Gene, you heard the official details, 180 million shares in this offering at $45 a piece. This is a massive offering. Tomorrow morning, what will you be looking for?
the stock to trade down, I think, throughout the day. I mean, I understand there's going to be some support, but again, there's either Uber needs to trade down or Lyft needs to trade up, but I think that gap needs to somehow close. I'll be watching that gap.
Interesting. Gene, thank you, as always. Great analysis. Gene Munster of Loup Ventures. Tim Seymour.
Well, I think the market factors are important here. I think the other dynamic here is now we have to think about how people are going to be approaching WeWork and some of the other IPOs that are coming down the pike. Gene basically said, I'd like to see this stock get down to a $60 billion valuation and settle in. Settling in at $60 billion is moving down 27% from here. So we have a lot of respect for Gene's view, and I think he is talking about this disparity right now between Lyft and Uber just on valuation. So I do think that the market conditions are part of this, but I think we've been teeing this one up for weeks now for this type of a mood.
Yeah, so, I mean, I understand what Gene's talking about. Autonomy is going to be a big thing. To me, Uber and Lyft are not the way to play it. I mean, why don't you go with something like NVIDIA if you want to play that? It's not clear to me that Uber has the advantage in autonomy at this point in time.